What's the simplest way we can talk about and have you break down this method and this concept of infinite banking and becoming your own bank?
Yeah, I'll give you the high 30,000 foot view. But if you go to my website, themoneymultiplier.com, I have a complete 90 plus minute presentation on the website. So like when you go there, just click on watch Brent now. And that's my full presentation with the downloadable attachments and all the examples that go along with it. So after you watch that, you'll really understand, or at least have a great idea of how this concept works. But just to give you the high level view, so this concept is a tool to build, keep, and create wealth. In other words, to recycle and recapture all of your money that has been leaving your family and going out to others. So let me give you an example. All right. So when we go buy something, Jesse, and I'm going to use an example of a car, and I go into this in great detail on my presentation in the car example of that 90-minute presentation. But look, the way that we buy a car is just either one of three ways. We either pay cash for the car, we bank finance the car, or we lease the car, right? So either one of those ways, what we have to do is take our money and we have to give it to the car dealer. So the car dealer gives us the car, he's got the money. Now, normally, that's how we buy a car, right? Is you give him the money, you get the car, transaction is over, everybody goes home happy. But how about if there's a way that you can add one step in your financial life, and not only do you get the car, but you also recycle, recapture, and get all the money back. So you have the car and the money too. Because if you do it the other way, where you're just giving the money for the car, that money, Jesse, is gone forever. It's gone. It's totally left your family. By adding this one simple step, you're now recycling and recapturing that money. Now, before we started this podcast, you and I were talking about a mutual acquaintance that we have. His name is Devin, and Devin lives out in Phoenix, Arizona, and Devin is a big real estate investor. And Devin, he found me just like those 17, 18,000 other clients found me. And now he utilizes this in his real estate world. So now the thing that Devin does is he goes out, he buys all of his properties by using this method and this concept. And when he does it, he's able to use the same money over and over and over again for multiple real estate deals. Okay. So go check out Devin Burr. Just go to Mr. Burr, BRRR. Okay. Mr. Burr on Instagram, TikTok, X, Facebook, all the social media stuff that I don't even know most about. He's got some really good examples on that. Also, Jesse, the concept that I teach is not new. It's not on trial. It's not being tested. It's been around for over 200 years. Like if you go research the Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Barclays, if you go look and see how Walt Disney started Disneyland, how Ray Kroc was able to fund McDonald's, how Pampered Chef got started before Warren Buffett bought Pampered Chef, this is the concept that the wealthy have been using for well over 200 years. So I'm not reinventing the wheel. I'm not starting something new. Even Nelson Nash, who wrote this book, he didn't really create the concept. He just really broke it down into simple steps to show people how to use it. Now, even though this book is over 20 years old, right? It was written in 2000 or 2001. I've really taken this concept and I've dumbed it down, right? So I've simplified it down into a third grade level of understanding it. In addition, if you've ever heard of Robert Kiyosaki, and right, so like Robert Kiyosaki's famous for the book called Rich Dad, Poor Dad, but he also wrote another book called Second Chance. In that book that Robert Kiyosaki wrote, Second Chance, the concept that I teach is exactly what Robert Kiyosaki talks about in the book. Also, Tony Robbins, he wrote a book called Money Master the Game. In chapter 5.4 of that Tony Robbins book, Tony talks about exactly what I teach. Now, it's great that this information is in those books, but the problem is when you go and you read, okay, just the information in those books, on this concept, it's complicated and difficult to understand. And most people, when they read through it, they read right through it, don't really get it, and just move on and never come back and research exactly what they're talking about. So that's where I break this concept down and make it simple. Now, let's answer your question, right? What is the concept? Well, again, so the way we're going to use the concept, the product that we're going to use to build, keep, and create wealth. Are you ready for it? It's going to surprise a lot of you when I tell you what it is. The product that we're going to use, the vehicle that we're going to use to build, keep, and create wealth is a whole life insurance policy in a mutual company that pays dividends. Now, I know what I just said. I said that nasty word, life insurance, and I just lost half of the audience because people are thinking to themselves right now, they're thinking life insurance to build wealth. That's a crazy way to build wealth. Why would I ever want to use life insurance to build wealth? That doesn't make any sense because Dave Ramsey and Susie Orman told me so. Well, no, you don't understand this concept or you don't know this concept if you're not using it in your financial life. Because again, let me be clear. This is not any type of life insurance policy. I know a lot of listeners are thinking they know everything there is to know about life insurance. What could you possibly teach me, Brent, about life insurance that I don't know? There is a lot that you don't know. And just if you're willing and you have an open mind, remember, God gave you 2 ears and 1 mouth. That means you should be listening twice as much as you talk. I'm still trying to learn that trait, but I'm working on it. Almost 58, I'm working on it. But again, the concept is going to be using a whole life insurance policy in a mutual company that pays dividends. So it is not, Jesse, it is not the type of life insurance policy that you can go buy from your brother-in-law that sells life insurance. We all have a brother-in-law that sells life insurance, right? It is not that type of policy. This is a specifically designed, specially engineered whole life insurance policy in a mutual company that pays dividends. Not a stock company. It's in a mutual company. Now, what does mutual mean? It means that there are no stockholders. There are no shareholders. You are the owner of that policy contract. You are number one in line. You outrank everybody else. Now, what's most important about this type of policy is because when you put money into the policy, you immediately, and my definition of immediately is within 30 days, when you put money into the policy, you immediately access the cash value in that policy. And when you access the cash value, Jesse, the thing that you're doing is you're using that money to do anything in life that you would do with money, whether it's pay off debt, pay off expenses, whether it's to send your kids to college, buy a car, buy a house, purchase real estate, invest in real estate, lend in real estate. I do a lot of lending. That's my big thing now. I'm kind of out of all of the long-term rentals and short-term rentals. I still have some. I have Airbnbs, VRBOs, but over the last few years, 4+ years or so, I'm really into lending money on real estate deals where I'm in first position on the collateral. The real estate is the collateral, and I loan money on those real estate deals. I get paid interest every month. But the way that I do that is I run all the money, or as much as I can. I run as much of the money as I can through the policy first, and then I'll make the loan on the real estate deal, or I'll make the purchase on the real estate property, or I'll go buy the car, or I'll buy the vacation, or I'll buy the wedding, whatever it is, college education, right? I'm actually putting the money in the policy first, because then what happens? You're able to make money on your money multiple times because you're recapturing and recycling the money.